Okay, so if you checked your portfolio this morning, today, Tuesday, February 24th, and you felt that familiar knot tighten in your stomach, you are definitely not alone. So let's break down exactly what is happening, because really, the next few hours could define the entire week for Bitcoin.
Right now, Bitcoin's price is flashing red. We've dropped below that absolutely critical psychological level of $65,000. And the big question on everyone's mind is this just another dip, or is this the beginning of something way, way worse?
Look, that feeling you have is totally valid. But I want to tell you something. By the end of this, you are going to know the one single price level that determines whether the bulls or the bears win today's fight. So stay with me. Yeah, it's pretty much impossible to ignore the noise right now, isn't it? It feels like every single headline is engineered to make you panic. We're seeing everything from renewed tariff threats that are spooking the markets to whispers about whales dumping their bags. And of course, the big one, these massive outflows from the ETFs. It really feels like a coordinated attack on your conviction. Now, what's really fascinating here is how all these things are connected. You've got on-chain data, I'm talking info straight from the blockchain, showing these huge wallets moving Bitcoin to exchanges. That's a classic sign they're getting ready to sell. Then, at the exact same time, all this tariff talk rattles the stock market, and that fear just bleeds right over into crypto. And then you have the main event. A reported $4.5 billion has gushed out of Bitcoin ETFs just this year. And let's be real, it often feels like it is designed that way, doesn't it? The market is literally built to test your resolve. But instead of getting swept up in all that emotion, we're going to cut right through the noise and look at what the cold, hard data is telling us right now. Okay, let's get a really quick, fast-paced look at the market as it stands today, Tuesday, February 24th. No emotion, just the pure numbers. So, as I'm recording this, Bitcoin is desperately trying to hold on to $65,000. It already dipped to near $64,400 earlier, which has made this level the absolute epicenter of today's battle. The Crypto Fear and Greed Index is at a 9. Let me just put that in perspective for you. That is extreme fear. This tells us that everyday investor sentiment is just on the floor. Now, sometimes that can be a signal to buy, but today, it's just pouring fuel on the fire. And this slide, wow, it just paints the perfect picture of the wider environment. This is a classic risk-off day. The S&P 500 is down, money is running for cover into the traditional safe haven of gold, and the US dollar index, the DXY, is strong at 97.6. And when the dollar is strong, that acts as a huge headwind for assets like Bitcoin. But wait. In the middle of all this negativity, there is one statistic that pretty much everyone is ignoring. And honestly, it completely changes the story about what institutional money is doing. Yes, $4.5 billion has flowed out of the ETFs this year. We know that. But, and this is a huge but, since they launched, spot Bitcoin ETFs are still sitting on over $53 billion in net inflows. So let's be crystal clear about this. While some short-term players are cashing out, the vast majority of that so-called smart money is still right here. They have not left the building. Okay, so with that context, let's turn to the charts. This is the battleground. This is where today's session is going to be won or lost. I honestly cannot stress this enough. $65,000 is everything today. It's the key support level. It's what separates a minor, healthy pullback from a much, much deeper and more painful breakdown. This is the line in the sand. So here it is, the two paths for today, plain and simple. For the bulls to take back control, they absolutely have to push the price back over $66,400. And crucially, hold it. If they can pull that off, the next logical stop is resistance up around $68,500. But the bearish case is a daily candle closing below $65,000. If that happens, a fast move down to test that huge psychological support at $60,000 becomes extremely likely. So the million-dollar question is, how do we figure out which path is more likely for today? Well, there is one piece of news that really cuts through all the other noise and gives us a massive clue. You see, what we're really watching today is a high-stakes poker game. It's between two very different players. You have the short-term traders who are reacting to fear, and then you have the long-term conviction holders who are playing a completely different game. And this just perfectly illustrates that conflict. On one side, you've got all the scary headlines. Macro fear from tariffs, $3.8 billion in ETF outflows in just the last 5 weeks, and all that selling pressure from whales. But on the other side, you have the conviction players. And you don't have to look any further than MicroStrategy. Just last week, they bought another 592 Bitcoin. That's not a trade, that's a statement. That's proof that while the headlines are all screaming sell, long-term conviction is quietly buying in the background.
Okay, we've looked at the fear, we've looked at the conviction. Now it is time to put it all together and make a call for the end of today's session this Tuesday, February 24th.
All of this analysis, all these headlines, all the fear and the greed, it all boils down to this one simple question. Which side is stronger today?
Here is the bottom line. For today, short-term fear is winning the fight. The headwinds from a strong dollar and the immediate sell pressure are just too much for the bulls to overcome in this single session. The battle for $65,000 for today is being lost.
So my prediction is that this selling pressure is going to continue, and we are going to see a daily close below $65,000. Specifically, I'm expecting a test of that $64,400 area by the time the session ends, and a close down here puts the $60,000 support level firmly on the table for later this week.
As always, please remember this is not financial advice. This is simply my analytical opinion based on the data we have for Tuesday, February 24th, 2026.
Okay, let's wrap this up with your action plan. Here are the 3 most important things you need to take away from all this.
Number 1, the market is absolutely gripped by extreme fear, and it's being driven by real macro headlines. Number 2, while some institutions are trimming from their ETFs, true conviction buyers are using this as a chance to accumulate. And number 3, the most important of all, $65,000 is the only number that matters for today's close. Watch it like a hawk. Now I want to turn it over to you. After everything we've covered, what is your price prediction for today's close? Drop it in the comments below. I read them all. I'll be right back here tomorrow to break down what happens next. Make sure you're subscribed so you don't miss it. Trade safe out there.